Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Well, if you've been watching, like I always say, the market was pretty much doing nothing for a while, but in the last couple of days of last week, we had quite a few moves, and you can see what happens when things get a little bit more volatile. As far as price goes, the volatility goes up. So now we're up here near 30. Last week we were way down here like 11 or 12. So we're getting in the absolute range where we could trade SPY today if we wanted to. We're going to trade something else, but SPY all of a sudden in the last week, for whatever reason, has become a little bit more volatile. Even though essentially the range hasn't budged in the last 3 to 4 weeks. Nasdaq obviously looks fairly similar. Same story. Volatility spike because of this big down move towards the end of the week. But again, overall, I mean, really, have we gone anywhere over the last kind of 2 or 3 months? Pretty much kind of the same spot we've been. But for whatever reason, again, people are starting to get a little bit more nervous, at least temporarily. And IWM is a lot more nervous. For whatever reason, this one shot up to the moon. You can see this thing has bounced around a lot in the last couple of weeks. Again, if you look at the last couple of months, it's kind of pretty much been in the range. But in the last, let's say, 2 weeks, you can see it's kind of shot right up. People, for whatever reason, the Russell, which is small cap stocks, are a little bit more nervous. But let's go what we're going to trade this week, and that is gold. As you've seen, let me type it in here. Gold, if you've been watching, is shooting up to the moon. As you can see here, it's gone on a tear in the last couple months. And unlike stocks, you'll notice this is different. Here, the price is going up and volatility is going up. That's kind of not the norm, right? Generally speaking, most stocks, most indices, it's the opposite. When it goes down, like right here, that's when volatility goes up. When a stock takes a big drop, generally that's when people get nervous and volatility spikes. But in the commodity market, which is things like gold and oil, silver, things like that, it works usually the exact opposite. As price goes up, it becomes more volatile. So just another interesting point to know about commodities versus stocks and indices, that kind of thing. So obviously volatility in gold is way up at 65, and it's at I think it's at all-time highs, to be honest with you. So what a great place to make a trade. Now I'll show you when we make this trade. Me, as always being a contrarian, we're generally going to do a range, right? We usually put it in a range. But if we have an assumption on up or down direction, we can do something called skew it. So let's say this was going to be our Iron Condor trade, right? We always like to put the stock right in the middle. But if we have the assumption that we think the stock is going to go up from here, what we might do is move this, which is the put strike. We might move that up closer to the stock price, and the call strike up here, we might move further away. So essentially, we're skewing it to the upside, meaning we're closer on the bottom, the put side, because we think it's going to go up, so we can move it closer, and we're leaving more room for it to run on the upside by moving the call side up. Me being a contrarian, I'm the other way. I think it's at all-time high, so I'm going to move the call side closer and try and move the put side further away. This would be a skewed Iron Condor to the downside. The calls are closer than the puts. Just explaining what a skewed Iron Condor is. So if we go to the trade page, we're going to go right here to 47 days. And unfortunately, because as stocks get higher, strike prices tend to change. What used to be $1 wide strikes, if I open these up now, you'll see these are $2.50 wide. So our trade just became bigger, right? We can't do $2 wide Iron Condors. It's going to have to be $2.50. So a little bit more risk, a little bit more reward potentially. So I've already set this up as our normal Iron Condor. And you can see here, the stock is at $2.15. So I'm going exactly $10 up on the call side and $10 down on the put side. And then when I make this $2.50 wide Iron Condor, I'm actually looking for 82 cents if I want to get my 33 cents per dollar width. So this doesn't fit quite yet, but obviously the market's going to move around on Monday and we'll see where that goes. But again, I'm skewing this to the downside, meaning, and I'll show you right here what that means, I'm going to move the call side closer. So I'm going to go down to 222, make it $2 wide, 250 wide again by making this 250. And then I'm going to go further down, move my put side further away. I'm giving it room to fall. That's my assumption. Go to 200. And you can see roughly the same price. Again, I'm not at 82 cents. But when you start trading on your own, you'll see the rules are the rules to keep you disciplined. But if you want to make this trade, that's totally up to you. Obviously, personal risk reward comes into play when you start trading. So if this was enough money to you to risk to reward, so 75 cents means you're risking about 175 bucks on this trade to make 75 bucks roughly. But that's a skewed Iron Condor to the downside. That's the one I'm going to do on Monday, assuming everything stays around here and I can get about 82 cents for this. This is my skewed one to the downside, just so you can see what it looks like the other way. If you think it's going to go up, right? We were at 205. We'd move this now to 207.50. We'd move it closer. And we'd move this one further away. So this was at 225 originally. We'd go to 227. This would be the skewed to the upside Iron Condor, because now the puts are closer than the calls. So that's our trade for tomorrow in GLD. That's how you skew your Iron Condors to fit what your assumption is. And again, we're doing this because it's highly volatile, because in general, commodities work opposite to stocks and indices. When their price goes up, generally their volatility goes up as well. Take care. Happy trading. Hello everybody, just a quick break in action here to make you all aware of the courses I have available on Udemy, which are these 5, but more importantly to let you know that these 3 right here are a 3-part series. So if you're anywhere in the mix here, now you know that Understand Options Completely is part 1, Basic Option Strategies is part 2, and Make and Manage is part 3. So you can start or continue at any level you like. The bottom 2 here can be taken at any time. They are just independent courses. If they interest you, please go ahead and take them. So you've got some knowledge now, and we know knowledge is power. But really, knowledge is only power if you use it. Otherwise, it's useless. So how do you take all this option trading knowledge and turn it into actual income? And the only way to do that is by actually trading options. As someone that's gone through the process, I know that making real trades is scary for many reasons, not the least of which is, where do I even start? I mean, there's so many roadblocks to making trades. What stock should I trade? What direction should I choose? Which options am I buying or selling? The list seems endless, which is exactly why I created my option income alert system. So don't you think you'd be a little bit more comfortable and confident if I was right there by your side making trades with you? Where now I will be there with my real-time alerts. You'll trade side by side with me in real time as I tell you what trade to make, why we're making the trade, and more importantly, how to make the trade correctly. But making the trade is only half the battle. When to close the trade is just as important, so you'll get those closing alerts as well. Listen, you've got the knowledge now, so let's put it to use. So how do we turn your knowledge into actual income with as little risk as possible? Well, the way we do that is by offering up the option alert for only $1 for the first month. Now, the option alert itself is going to send out 2 to 3 trades in real time as I make them via text or email directly to you. And as I close these trades, you'll also get those closing alerts in real time as well. Now, if you want an even better opportunity, the Option Pro, which is the exact same alert service as the Option Income, offers up all the content I've ever made, courses, webinars, etc. Over $2,000 worth of options courses for only $19 for the first month. So the way we're going to sign up for either of these is by going to sharpertrades.com, clicking on the products section. Both of these alerts will show up. Depending on which one you prefer, you'll type in these coupon codes and you'll either get the option alert for $1 for the first month or the Option Pro for only $19 for the first month. Look forward to seeing you all over there soon. Take care.